works. That way you can have screenshots of it. Man, I'm so nice to you. This is stuff I did not want to teach. I did not want to teach it. You're an asshole. You should have wanted to teach this. No, it's too good. And you think you like this stuff. You ought to see the stuff that I'm never going to teach. That makes me. All right, so we're going to do top, right. That seems like it's probably going to be too much. Yeah, it's good. So stop loss is here. And the entry would be here. So you're going to watch this level, Caleb. This is your entry. Let me thicken it up a little bit. And we'll make that this color. Man, this is a long video. Go watch somebody else. I'm here teaching my son how to be profitable and how to read price action. You don't want to be here for that? Go do something else. So entry's here, stop loss is here. That's the methodology, okay? Advanced version, okay? How do you mitigate underlying risk? How do you reduce risk? How can you use smaller stop losses? How can you make your stop loss really tight like this? How do you know that these stop losses aren't going to get hit? How do you know, ICT, when you're holding, dude, bro, the stop loss has me in tears. Oh, I'm dead. The stop loss killed me. That's all the comments. When I'm sharing examples, when you see me using the stop loss placement, I'm going to show you one element to sometimes, not all the time, there's a lot of things that go on based on individual trades. But initially, Caleb, when you're watching price, not taking trades, you're watching it enter. You're thinking, okay, I want to see it, how it behaves here. If it goes there, I'm expecting it to go halfway, no more, but leave a portion open. But if it goes up there, then you demand immediate response where it needs to drop, okay? If it doesn't completely come back to this candle's low, and it leaves a portion of that open, that's what you want. And then you anticipate very fast speed and big, large range candles going lower. After it trades to that candle's low, like that. Once it does that, then you absolutely demand immediate response, and the same thing happens. In my videos, you'll see me say, I want to see speed and distance and large ranges going down. And then you get it. That's qualifying and quantifying the setup real time as it happens. You need to be doing those things while watching price, not entering a demo. Not entering a demo, not pushing any buttons. You do this for months. You observe and you watch, and it teaches you and trains you to see, oh yeah, this is what it looks like. It's going to behave this way. And then when you start using the elements I'm showing you here, you start with this price level plus one tick. If it can trade there, that means it's got to go 2 ticks above that. If it books that price, you hypothetically say you would be in a move, but you're not even demoing it. You're tape reading, okay? You're watching and observing. And then at that point, once it does that, hypothetically, you would be in a trade, whether demo or live, using that logic. So you do not want to see it book that candle's price high. But what happens if this is a little too rich for you? You don't like that. It's too much range. How can you reduce it? Well, if you have this candlestick number 1 in your fair value gap, if it has a wick like this is a premium array because it's going to be trading up to it. You don't want to see it trade there. But you can take that wick and do this. There's consequent encouragement of that wick, plus 2 ticks. There you go. The market will run up here. At one point, this will be a bold-faced bullish candle. You'll shit yourself, okay? You'll be scared. Some of you watch my live examples of trading, and you watch it and you're thinking, oh man, it's going to be stopped out. And then all of a sudden it doesn't. How do I know that? I'm doing things like this. But you don't want to hear me. You don't want to learn because you want a little video, something that tickles your ears and gives you right now little thing talking points. So you can go around and start talking like you know something when you don't. I want you to know it. I want you to understand it. So by examples of things like this, it affords you better, efficient stop loss placement. You're not fearful. Why would I fear this never being hit? Because it's 2 ticks above the midpoint of this. This candle opens and trades down. Isn't this overlapping that candle's low when it does this? So essentially, what is this area here? It's a balanced price range. Balanced price ranges, we don't ever want to see it go down, start here, go back over, and then come all the way back to the top. If it does that, it's probably going to go higher, and I don't want to be in that trade. So I don't need to put a stop loss up there. I can be just above the consequent encouragement of that wick because it's a gap, just like this is a gap. Okay? So anyway, that's the business there. So now I've taught you how to trade and how to enter a trade stop loss and how to also use a very, very small stop loss. I've also taught you today how to anticipate when the market's going to run and be aggressive and start creating large range candles. There's only 2 circumstances that cause that. I taught you both of them today. When you leave a gap opening or if it closes the gap. If you leave a gap opening and it's the upper half when you're bearish or the lower half when you're buying, once it leaves it, it needs to accelerate and move away. And that's true. But if it goes up and fills the gap in entirely like it does there, it must immediately give you speed and distance in large range candles moving away from it. And then once it takes out this low here, now we're in a new range low. You put more data on the chart. You're learning some shit today, ain't you? Man, I wish you would have taught like this first time, ICT. See, they can't be happy. They're never going to be satisfied. Instead of saying, thank you for teaching it, they're going to say, I wish you would have taught like this the first time. You're a dick. Oh, shit. You can't win with some of these guys. So anyway, we were looking for this level here. We had the response as we were looking for it and traded off here. Once it takes out that low, if you see that happening, in your mind, Caleb, you would say partial there. Even if you had single contract, partial there, and you screenshot it as it trades below that. And then you watch and observe. How does it behave? How does it behave? Goes up one more time, bumps into it, and drops away. Comes back one more time. I gave you the order block here. I said, we do not want to see it trade above. Go back and watch the live stream. I know you can't rewind it right now. And I'm not going to change that because when my son's watching live data, I don't want him to be able to rewind or change anything. He has to see it as it's happening. And if he isn't watching and paying attention at the time it's happening, he's fucking missed it. Just like you. You've missed it. You've missed the opportunity. You've missed the opportunity to study it real time. It is what it is. There is no DVR advantages here. This is the way it is. You don't like it? Go watch somebody else. I'm not in here trying to make everybody happy. I'm here training my son. This is what it is. But he's in the fucking dungeon now. So this candlestick, I told you, that's a bearish order block. We have a fair value gap there. I don't want to see it trade above it. We already outlined and showed you. And it didn't do it. See that? So if you were going to trade the order block, say that was going to be your methodology and you were using that here, okay? Where would your stop loss be? This is a real challenging question for some of you that haven't taken notes today. For those that have been taking notes, this is a pretty easy one. If you're looking at this bearish order block, okay, it's part of the run that's going lower, okay? This is the midpoint of that wick at 8:30's candle. We are exploring the likelihood of it trading lower. We're part of a sell program. That means it's going to most likely continue dropping lower. Okay, so it's only coming back to that midpoint to do what? Offer fair value. So if it leaves it like it does here, it starts to trade back up. That right there is your bearish order block. This is where the algorithm gives little, like a mile marker, like a bullet point or an exit ramp or a traffic control device if you're a professional driver. A notation, if you will. This is where your eye should go to, okay? And that range gives you the levels to trade on. If you have not been a participant of the trade yet, you can use this up-close candle to formulate an entry. But where does your stop go? It needs to be above this candle, okay? It needs to be above it. But where? Where's it got to go? Some of you are young. I'll give you 10 seconds more for the ones that are still thinking about it. I'm having fun today. I might go till 5 o'clock. No! No, don't do that. I'm gonna be divorced. My boss is gonna fire me. I'm trying to watch you, listening to you, and he's gonna look at what I'm doing. It's not my fault, bro. All right. So anyway, you probably already noticed we have this premium wick. It goes above as the next candle above that bearish order block. Your stop would be right here, plus 1 tick. That means you're safe. You're inside of the realm of staying within the context of the sell program. You're above you're above the bearish order block, and you're encapsulating it based on the wick, because the wick can be with this like this, okay? There are times where you will see this formation of a up-close candle and it drops, and then it'll spike through. And if it does spike through and there's a wick, what it does is it's going right up into half of that wick or just falling short of it. Then if you got stopped out, that's when I'm going to go right back in again. If I missed something down here and I'm seeing price as it's trading up into that wick, okay, I'm going to get short there, trusting that this was the order block and this is where the damage is being done. Don't think for a second the order blocks are always going to be protected. They're not always protected. Sometimes the market will color just outside the lines. There's no perfection, but it doesn't change the underlying narrative. It doesn't disrupt any of that. Now, I'm going to give you one more advanced topic, and then I'm going to close it because I'm hungry. And a banana and a little bit of orange juice before I started today is simply just not enough. All right, so there are times when you're anticipating a price run, okay, and it's going to reach for a target. If the market is reaching for these upside targets or downside targets, and it creates the wicks, but doesn't reach the targets, okay, and it starts to create like this reaching element, where it goes up a little bit, comes back down, it goes a little bit higher, and it goes back down. If we anticipate a level, and I'm going to be full disclosure here, I believed at 8:30 that we were going to spike up and hit this new week opening gap. I believed at the time watching it, I believed that would happen. And it didn't happen right away. It deferred and waited until the opening bell, which is the next expectation, because that's the time elements, right? Well, at 8:30, we had a news driver. It failed, okay? If there was no news driver that had like PPI, CPI, FOMC, or non-farm payroll, if those things not being part of the equation, if they're not in the narrative or the day that I'm looking for these types of things, if it does something like this, where it creates a candlestick wick like this, and I believe it's going to trade up here. Remember, CPI, PPI, FOMC, and non-farm payroll, those characteristics that are around those types of reports, they're always manually intervened. That means that the algorithm is not letting, or let me say it this way. The algorithm is being interrupted and disrupted, and there's a hand in the mix, if you will. It'll go just short of where you will go later on when the market opens at 9:30, or it'll go beyond where you thought it was going to go and just keep on going. Those are the two criteria. That's the reason why you have to be very careful on those trading days. That's why I tell students, don't trade on those days, because you don't know what you don't know. And you're going to discover that you don't know a whole lot, and it's taken some of your ass off of you, ripped your face off, decapitated you, blew your account, wrecked you, divorced you, okay, ruined you, got you fired because you lose your mind because you lost your account at work, and they're like, what the hell are you doing? Oh, I lost my mind trading. Well, you ain't supposed to be trading. Now you're fired. You can avoid all that stuff by simply not trading those days at the time of the release of the report. It doesn't mean don't trade them at all. I've made it very plain and clear that you should not be trading at the time of that release. Even on non-farm payroll, if you want to trade the afternoon, it's easy to do that. You can trade 20, 30, 15 minutes after the initial non-farm payroll numbers hit. But trading into them or trying to predict that, you're never going to be good at that. And just avoid it. But with those things said, and all things being equal, if the market starts around, and I believe it was going to trade here, and I told you that yesterday, the market's going to trade up and try to gravitate towards that. If the market does create this wick, and in the next candle, we start to trade up, okay? But let's just say that I believe that they're going to manipulate price not because of the 8:30 news, but they're going to leave relative equal highs, or I believe they're going to engineer them, okay? If I believe that, then what I like to look for is this formation. It's the opposite of that, where you're predicting highs, projecting highs with the wicks. Sounds cool, doesn't it? Watch. If we have a day or a session, and I believe that they're going to try to keep highs, and I've done this on Twitter, I've done this in execution videos, I've done this in Twitter spaces where I've literally called out every individual candle, or I've mentioned them in other people's live streams where I'll go into their chat window and I'll say, I believe they're going to keep the relative equal highs open or not traded to until the opening bell, or at 10 o'clock, then I think they'll run it up there, and then we'll use a silver bullet idea. If I have an inkling that the market's going to keep a high in place or a low in place, I like to use this concept here, which is the first candlestick that creates that wick here to there. See that? Now, what happens if it falls short of an objective where I'm reaching for? And this is ultimately where I think it's going to trade to, maybe later in the day, at the opening bell or after the opening bell during the opening range, the first 30 minutes between 9:30 and 10 o'clock New York Eastern time. If I think they're going to keep that there, but I'm scalping because I can buy long and sell short in the same day and go back and forth, like I was talking about yesterday, I want to be in a market environment that creates and promotes those opportunities. If it's just one-sidedness and it's real lethargic and choppy back and forth, but real tight ranges, but still drifting high, I'll leave that to somebody else to trade that. And they can tell me they made 300 handles and I'm a dick because I didn't make as many handles there. But then I can come back, the next day with less of a range and make 4 times than they got. So if those instances are there, and I believe that the range is going to stay intact and they're not going to trade to an objective. In other words, I believe that they're engineering liquidity, meaning you didn't know about new week opening gaps and started talking about it. So imagine a time before you learned about them. You might be thinking when this candle was bold-faced bullish, wow, it's going to keep going higher. Who knows where it's going to go, right? Well, if I believe that they're going to hold that range and use this objective later in the day, post 9:30 opening bell, and I start to see a candlestick do this, and I'm long, say I'm long in a scalp. Once it creates this, I want to see, it's still likely to go here. I might be wrong. So I'm going to give it a chance to go one more time to reach for it. If that's the case, then I can take this range here, and it's going to do the opposite. It's the mirror image of what this was doing, where we create the high wick, okay, and it's trading half of this wick here, but this wick and then half of it. It just falls short of half of that. That's reasonable. But what happens when you anticipate a range staying intact and it not breaching it or trading to an objective because they're engineering liquidity? They're deferring a run to a particular price level, but you're in a trade or you're watching price action. It's really fun to do this. You see a candle create this initial wick, then the next candle, it starts running above it. What's this candle's high? You're looking at that price right there. Okay, right here. What's that candle's high? 19,149 even, right? That's what you're seeing right here. This is half of this candle's wick that has yet to form. And what is that? Boom! That's algorithmic. I used to sit on baby pips and troll the fuck out of everybody and say, look, I'm telling you, I can call the highs and the lows. I can do it with individual candlesticks. I can do it in the hourly candle. I can do it on the daily ranges, the lower, weekly range. I can do all that stuff. A lot of those things, I'm not going to teach you that stuff. But tell me how this is buying and selling pressure. How the fuck is that just going to just be like that? Wicks do the damage, but it's controlled demolition. It's controlled. It's controlled. They're only going to do what it's coded to do until they manually intervene. And when they do that, everything goes off the table, out the window. Don't trade. Simply sit still. I don't care how much it moves around, how many people come forward and say they made money here, they passed their funded account challenge, or they got this much and they're going to get a payout on it. I don't give a shit. They're not going to do that as a steady diet. Everybody can get lucky once in a while. Once in a while. But you're not here to try to be a one-trick pony. You're not here to try to get good enough to show one broker statement one day that he did it right. You're not trying to do that. You're trying to be consistently profitable. And before you get there, you got to be able to see what these things do, how they repeat, how they tend to repeat. When will they produce these setups? When do you anticipate a price run? And by having all these things understood, you can clearly see it just in today and yesterday. I have given you the equivalent of literally 6 chapters in a book that I couldn't write in a book. These are subjects that you have to see them in charts. You got to watch it unfold. Imagine me explaining to you in a screenshot picture when it was up here. I believe that it could trade into this fair value gap. I believe it can do that. I believe that it's going to use this as a breaker because we've already ran stops in a level that I knew the previous day. Take my word for it, bro. Trust me. Right away, we're at a point where the people are going to be taking the book and sending it back to the publisher saying, I want my money back. This guy's talking out his ass out of hindsight. But see, you can't do that today. You can't do that yesterday. You can't do that since last Monday when I started streaming every day. You can't do that because I'm giving you things that are over top of real price action live. And let's say I took a picture and I didn't have any of this data to the right of all this here. And I was pointing to this level here saying, trust me, bro. This is where I think it's going to go. And then I show you the next picture and it looks like that. That's the equivalent of what you get from people mentoring or using market replay. How is that inspiring? It doesn't inspire me. I would feel shitty if I was trying to use examples like that. Like I have to be out here live explaining this because if it isn't real, I can't explain it. It wouldn't be there. It won't repeat. Right? I mean, clearly you can appreciate that. Even if you don't like my personality, you don't like the way I teach, you have to come to the conclusion and be real. If it's there, if it's valid, if the stuff really works, and if I know it, then I can communicate it and explain to you what it's going to do conceptually, why it should do it, and when. Now, if you get those things understood, can you think for a moment? Put your pitchforks and your torches down for a minute for the people that are watching don't like me. You're just looking for little bits to talk about and troll. Think about it for a second. If those two things are equal and true, that there's sound logic here, it really does work, and it can be timed. Would you agree that if you have those aspects under your belt and you understood those components to this, can you see how easy the entries are after that? Can you see how easy the stop loss placement would be? And how the target, where to get out and where to take partials at? Because literally I gave you a clinic on those very things today and yesterday. And you didn't need to see me push a button. You didn't see me do a demo. You didn't see a live account. You watched me explain these candlesticks to every human being that's watching this indice all around the world. We're all watching the same market. It's not like fucking Forex where Tom, Dick, and Harry's fucking brokerage firm has a different high or a different low, a different opening price because they can fuck you on the spread. Everybody has the same price. We're all looking at the same thing. You can't escape it. You can't get away around that aspect. It's real. And I'm doing the lowest latency in live streaming. I pulled out the levels. I told you where to focus at when we first got on the stream. I was a little discombobulated at the beginning because I was angry, but I found my groove. But I taught you today 2 forms of turtle soup, real one, not Wish version, not the Street Smarts version, okay? But this one here is going to require you to understand a whole lot more because it's going to be very difficult for you to sell short as it's raging into that. And I promise you, there ain't a motherfucker on Twitter and a motherfucker on Instagram that's going to take a trade as its bold face like that and go short and do that over and over and over again. I can do that. And I have examples of proving it with a live fucking account, not demo. I have examples of that. You can see them. You can watch me enter them. You can see me using a stop loss. You can see the targets being hit. But when I teach with a demo. I teach that way because I'm giving you an illustration inside of a controlled environment that I'm not going to take a loss. I'm not going to realize a profit. And that means that I'm teaching you under that medium's limitations. So that way, there's no miscommunication here. I am not trying to tell you, copy me with your real account. Copy me because I'm pretending to be a financial advisor. I'm not. I am a candlestick whisperer. Okay? That's what I am. I'm telling these candlesticks when and how to move and how to dance. And I'm teaching you the language and the sheet music they follow. That's it. That's all we're doing here. That doesn't mean buying and selling profits. It doesn't mean equity curves going through the moon. It just means that that is our language here. That protects me. It protects you. That means I can talk and be free about what it is I want to talk about and how I want to talk about it. And no one can take it out of context and say, you caused me to lose money. No, I didn't. Absolutely not. Nope. Because if you copy me and you're going to see down in the lower left-hand corner, it's going to say paper trading. And I'm going to execute in price action that's live using the logic that I'm outlining here for my son. And when these trades pan out, you're going to have the problem of thinking, okay, if he can do this, why didn't he do it with a live account? It's because I'm in the United States. There's an organization called the Commodity Futures Trading Commission. They have tapped me on the shoulder in the 90s because I was not using risk disclaimers and I was telling people what to do. And I didn't know that was against the law then. And they served me papers at my aunt's when I was living with her. And I don't want any legal trouble. Not with that shit. So I learned by lesson. Okay, I said, okay, I'm never doing that again. And that's why there's risk disclaimers in my description and at the start of the live stream. And when I see other people live streaming that don't have those risk disclaimers, I'm quick to tell them, you are fucking around and you're going to find out. You do not want to be messing around with this shit. Back then, they loved fucking with people. And I was growing in my community on America Online. So there you go. I don't want to be in trouble because some asshole said, you caused me to lose money. And here's the proof. Proof of what? If you traded with real money when I'm trading with a demo account, you're losing that fucking case right away. They're not even going to worry about me because I'm trading in a demo account. You people in other countries, you think you're fucking smart. You leave condescending comments like you're so intellectually superior. Oh, you're trading with a demo account, Mr. Demo Trader. You have no idea what it's like in the U.S. These motherfuckers, our country is so litigious. They're trying to sue everybody, especially now. Everybody's looking for a lawsuit. And frankly, I don't give a fuck if you ever like me or use my information. I don't care. I have enough people out there that have used it. They've communicated their appreciation for it, and I'm teaching my son how to do it. So because you're all watching me teach him, and because it's public, I'm going to use that medium as the same methodology that I've used all along as a mentor. I'm teaching through the medium of a demo account. If I can't do it with live price action, where it's real-time price data, if it doesn't hold up to that, well, it goes without saying it wouldn't work in a live account. That's an easy litmus test. You think that somehow that I'm going to forget how to do it because now there's money, real money? It's the same thing. It's the same thing. Nothing's changing. The logic isn't morphing into something else. I'm not excited about or fearful of whatever the outcome of the trade is going to be. That's the whole point of you learning. The whole point is for you to be here so that way you desensitize yourself and strip away all the fear and the concern and the excitement about making money. It shouldn't be exciting. What you should be excited about is you're learning how to read it. You're being comfortable with, oh, I wasn't surprised by that. I expected it to do this. I expected it to do those things. And when you get to that conclusion, it's very fun to be a trader because you're not going to go around with a sharp stick. Where, I've done this in the past. It's how I got traction. That's how I built my channel initially. If I started a fire, people would come there and see what's burning. And it's usually the people I was pointing to. And here I was trolling them with a demo account, knowing full well I'm clowning them because they can easily come back and say, oh, you're a demo baller. Right. I called myself a demo baller, and that's why everybody calls me that. I coined that term. But I did it as a way, so number one, I could be disarmed. What could they say against me? Nothing. You can't say shit. I've already proven that I'm teaching through a demo, but I'm able to see something in real price action that they're not able to do. So I had a lot of fun with that. And sure, did I overstep my bounds and get a little too hard with a few of them years and years ago on baby pips? Of course I did. But that's how you create an interest. Because otherwise, I'm boring, right? I'm an old fuddy-duddy guy that just talks too much. So if I can cause a fire, a train wreck, a car accident, where there's smoke, there's fire, that means that I don't have to advertise. I'll get people talking. And then that's how this channel grew to 1.33 million followers. Not one advertisement, not one. And I'm not liked by everybody. And everybody thinks I'm a fraud. Everybody's like, well, he's not on the leaderboard of Robbins Cup. Are you still in the Robbins Cup? Yes, I'm in the Robbins Cup. But I don't see anybody else. I've given them all this whole year. And not one of them got up there. Well, that's not entirely true. One got up there by an accounting error. But after that, nothing. Apparently, it's not his circus. It's not his monkeys. That's a pretty good one. That's a pretty good excuse. But I was looking forward to, look, we're going into September in a couple of weeks. Good grief. It should have been easy for them to get up there and at least make a showing, right? But we'll see. We'll see. It's going to be fun in December. December 31st. I might come back on January 1st and wish you all a happy New Year on Twitter. I'll come back just for that. But I taught you a lot today. I taught you a whole lot today. And some of these elements I had no interest in ever sharing. And, granted, is everything that I taught here going to be applicable to every one of you? No. Some of you had lots of your questions answered. Some of you have new questions that came from this, and that's great. That's great. Write those questions down in your journal, okay? And you'll see by the natural progression of me doing this over live streaming and talking about price before it happens and watching and giving you further details like I was doing today. I taught the only two elements of turtle soup there is, okay? Buying below old lows or selling above old highs. There's only two forms of that. It's trade direction and change in a state of delivery, which is, this is a turtle soup for that. It is not the Street Smarts version of it. I just like the name, okay? I love the name. If I had another cooler name, I've used the idea in that name since 1995. So it's kind of like, why change it? I always give credit to the inspiration of the name and the idea of stopping out somebody, because that book, those two authors, they were highly influential to me, understanding being stopped out and going the other direction. Like it didn't cross my mind that was a thing. That's how green I was as a trader in the 90s early on. But it solidified it. I was like, oh shit, that makes perfect sense now. Oh, no wonder. Okay, that's what happens to me when I'm wrong. I'm getting stopped out and it's going the other direction. And I'm not aware of what's going on. And I'm in shell shock. Like a deer in headlights. I'm staring at it, watching the price keep going. And now we can see when it changes. And we can be a part of it. And when we get that run that we waited for, that we went into the trading day looking for, not, well, I don't know what's going to happen today. Let me just find something. Fuck that. If you do that, if the start of your day is like that, you have an 80% chance of leaving the day unprofitable. Write that down. If you're going into the trading day and you don't know what to expect, you're waiting for more information, and you are going to make a trade, come hell or high water, you're going to trade. You have an 80% chance that you're not making money that day. I'm telling you, that's the gospel. Contrast that with, I know what I'm looking for tomorrow and the rest of the week. This is where it's probably drawing to. If this level or that particular level doesn't get traded to, I'll give you a perfect example. Yesterday, before we closed the stream, I told you that this new week opening gap here from the July 28th, look and see if it's not in there. It's there. And I talked about the daily objectives on NASDAQ. The volume imbalance, the short-term high on the daily chart, all those things could be factors for it to, if it's going to continue higher. That's where it could gyrate to, because it's an election year. They think the general public thinks that the stock market is a measurement of the economy, and it's not. So if you know, like I was telling you yesterday, that this is a likely upside objective, well, that means when I start the day at 8:30, when I was watching this, I wanted to see it trade up there right at the 8:30. If it would have done that, hit it, and then at 9:30 went above it and then failed, I would have expected something like this at 9:30 opening bell, because it would have traded to the objective I gave you yesterday, and it did it on the first leg at 8:30 and then left that smooth like that, real easy, didn't go above it at all. And then at 9:30, if it would have poked above it one more time, that would have been a turtle soup, and I would have said right here, screenshot that while it's bold-faced up, and then when it's dropping down, I'd say that's exactly what the turtle soup looks like as it forms like this. But you have to know what you're looking for. If you don't know what it's likely to reach for, before you start looking at your charts, like you have to have notes. When you close your session out today, when you're done, you're not looking at the charts until tomorrow, whatever the next session is for you. If you don't have levels that are key to you where you think it's likely drawing to, you don't know what you're doing. If you're going into the day and you don't know what you're looking for and you just don't know, the top of your notepad and on your charts, type it out. I do not have to trade today. Let that be a reminder, because it's so easy to talk yourself into a trade. It's easy to do so if you're watching me. It's easy to do so if you're watching other live streamers. And if you don't know why you're doing what you're doing or expecting what you expect to see in price action, in the moments before you turn your systems on, your computer, your phone, or whatever it is you use to watch the charts, if you don't have that information ahead of time, written down somewhere, either in your charts annotated or on a notepad, if you don't know where it's likely to be drawing to next, do not give yourself the open invitation to go out and simply trade because now the markets are trading. You have to exercise a great deal of discipline and be responsible. Now, I have a lot of experience. I've been doing it for a long time. There may be moments where I don't have a bias. And I've shown this in my mentorship when I was doing live streams for them. That was part of the mentorship. I would tell them, okay, I don't hold a hard bias right now. So I want to see what we were going to get at the opening bell. I want to see how they use the opening range between 9:30 and 10 o'clock. Okay. What I'm saying is I'm not holding a bias that I can trust that's going to lend to, it's going to draw higher to this premium array, or it's going to draw lower to this discount array. I don't know which direction it wants to do at the moment before the session starts. And then when I look at the opening range, then it gives me more information. Then I can say, okay, well, they made this area jagged. So then I'm going to look for something that's a smooth area. Or if it's a high impact news driver, then it's going to be what? It's going to be the liquidity below that. So we don't need to see a relative equal high or relative equal low when there's a CPI number, PPI number, or FOMC, or a non-farm payroll. Those are the characteristics that you do after the report. You look at how they're going to come back on the individuals that would have made money on that run. I used that logic yesterday, but I also told you in advance, if it goes higher, I'm not interested. I'm not interested in that. So I didn't change my protocol. I just told you, this is a day I would not be interested if it just keeps grinding higher. I won't chase that. I won't worry about it. And then I want to be a part of a day that has like this. Like we had really nice, we had the mess here first. Then it went up to where I was telling you yesterday. It went to it perfectly. Then we watched this area here. It didn't give me an entry if I would have used it because it's not inside the fair value gap. It wasn't booking that price. But the logic was it should move from here down to the midpoint of this wick. We watched it happen in this fair value gap. It traded up into that, and it returned back to the 6 o'clock opening price, which is not on here anymore. But we went to the next quadrant level here, which is the lower quarter, and then the low. And then we would be attacking the liquidity resting below that. And then I gave you measurement strategies on how to take the high, the low, whatever the quarter percentage of that range is, projected below that low. That's a pretty good ballpark figure. It's not going to give you the lowest low, but it's going to give you something that you can be happy with. And then we get all this range back all the way up. It pierces this high, and then we broke right back down. And where does it trade to? Look at the bodies of that candles right there. Look at that. You think that's random? Boom. Swept it, and now we're just gyrating around. I would not be interested in trading anymore today. I'd move to the sidelines and I'd be content with what we observed today, what has been logged as price action. I would break this down, okay? I would go through the whole individual day from a 1-minute chart, a 5-minute chart, and a 15-minute chart, and then annotate everything like I'm doing here. There's other things in this chart. I don't want to do everything for you because if you just screenshot my chart, there's your journal entry. And then you put your annotations here. That's not what I want to do, Caleb. I want you to go through all of this. And that goes for all of you watching too. Don't just take my chart and screenshot when I have annotations on it and say, I'm journaling. No, you're not. You're fucking collecting stamps. That's all you're doing. That's a stupid fucking hobby. It's like collecting baseball cards. What the fuck's the point of that? That's dumb. Just do something else. So if I collect colognes, that's a better hobby, right? You see how everybody has their own personality? And some of you probably have some really good money in stamps or maybe even baseball cards. I think it's stupid. And some of you probably think it's stupid for me to have colognes. It's $430 a cologne. That's dumb. Well, it's what I like. You like baseball cards. You like stamps. You like whatever. Everybody has, it's different strokes for different folks. But in trading, it's going to be the same thing. I have lots of tools, lots of things to get into a trade, lots of criteria that you can apply and make it yours with your personality. But your model that you arrive at, if you made it available to other people and saying, this is what I do, I don't have a problem with that because it's what you learned from me. You could go on YouTube and say, this is my model. It's not a mentorship. This is what I do. And this is how I'm going to implement it. And then live stream. I've encouraged my students that want to do it. I'm not trying to talk them into it. I said, if you want to do this, if it's in your personality to do so, and you know your model, you don't want to discover your model by doing that. Okay. There's a couple of live streamers out there that are doing that right now. And that's why they're not doing well. That's exactly why they're not doing well. And they're trying to sell courses too. So that's a stupid ass fucking procedure. If the person's failing and losing their funded accounts and they keep resetting and they keep proving it to you because they show you the numbers. Here's the account numbers. Here's my new, I blew the accounts. But all that stuff. And they're trying to sell you a fucking course, no matter how cheap it is. You're an idiot if you buy that. I'm just saying, you can hate me, call me whatever you want, okay? But you're a fucking idiot if you pay money for that. That doesn't make any fucking sense. Now, I have students, okay? I have students that have made money. They have placed on the Robbins Cup. They have literally taken hundreds of thousands of dollars out of several of the funded account companies. And they aspire, and some of them are actually doing their own mentorship, okay? I took the interviews down. In case they haven't noticed, I'm thinking public knowledge. I took those interviews down because now what you just did is you entered a business of education. And you went in that business with my name attached to it some way, shape, or form. I am not going to endorse your business because I don't know what you're doing, how you're conducting yourself as a business person. I'm not saying that that's right or wrong. I'm just saying I have to distance myself from that.